Welcome back. We are now in segment 8.3, and in this segment we will be discussing about holding levels. So far in this chapter we have discussed about the importance of working capital, the need for working capital, why companies require working capital assistance, and we have also seen the concept of net working capital, right? So in this segment we will build on the concepts we have discussed so far by understanding about holding levels, right? To understand the concept of holding levels, let's take an example, right? Say for example, you are a banker and your son or the son of your colleague, he's studying in a college in a different city, right? He's not studying in this city. In a different city, he is pursuing his education, and he's staying in a rented room, right? Right? He's staying in a rented room. So obviously there will be some monthly expenses he's going to incur, right? So he's a student in a different city, staying in a hostel, okay? So as a father, you need to provide him every month, right, some money, because he's a student and he's not earning anything, right? But you don't want to give him as much money as he wants. See, if you don't want to give him less than the requirement. Say for example, he requires say 2,000 per month. This is the true value, right? This is the true value of his monthly expenses. You don't want to be giving less than 2,000, because in that case he'll be facing difficulties in meeting the expenses, right? You don't want him to be troubled, okay? But at the same time, you don't want to be giving him more than 2,000, because he's a student, and that extra amount he might be spending on unnecessary expenses like movies and things like that. So they should not be over financed and they should not be under financed, right? That would be your a goal. So how do you arrive at that amount? How do you arrive at that 2,000 amount? How do you arrive at that your son is going to require 2,000 per month? Because you yourself are not a student. You are not living in that city. You don't know what are the monthly expenses, right? You don't have any idea what is the monthly requirement. So how do you go about arriving at this amount? How do you decide what is this? What is the reasonable amount for his monthly expenses? So what you do is, first thing you listen to him, right? Because your son is the person who is living in that city, right? He is the person who is incurring the expenses. Okay, he might say he requires 3,000 or 4,000. Okay, but then first of all listen to him. Yeah, this is the first step, right? Because unless you listen to him, you're not going to get a rough idea as what is the extent of requirement. Okay, right? You will not accept this figure. Whatever he says, you will not say you will give him. It's not that whatever he says you will give him, but first of all you listen to him, right? You will use your own judgment, right? Once you get this figure from your son, then maybe you will talk to some other parents whose children also whose children also are staying in some other city. Maybe you can do that, right? Or you can compare your son's last 3 to 4 months average, your monthly expenses, right? Say for example, last 3-4 months you are sending him every month 2,000, but this month he's asking I want 4,000. So then you might inquire, right, why this month you are asking more. So the point basically is you ask his version first of all, right? And then you through your own independent sources verify whether that is correct or not, and you use a judgment and finally decide what is that reasonable amount. See, this is exactly the same in the case of companies also. See, when you're assessing the working capital requirement for the companies, this is exactly what you do. Let us see the analogy here. I said the first thing you do is you discuss with your son, right? The first thing you do is you discuss with your son. In the case of your a child staying in hostel, to arrive at the reasonable amount, you first of all discuss with your son. In the case of companies also, as a banker, if you want to know what is a reasonable amount of working capital limit that the company is going to require, the first thing is you have to listen to the customer, right? See, credit assessment is not at all a unilateral process. It's not a one-dimensional process where you decide this is the required finance. Right? I know everything. This is what I have appraised so many projects. This is the amount that is suitable for this industry. I will sanction it. No, you can't say that, right? There should always be a discussion, because industries vary, and even within the industries, companies vary based on size and some other individual factors. So to truly arrive at the correct amount of working capital, you have to truly understand what is the operating cycle of that particular industry. We discussed the concept of operating cycle. So you need to understand what is the operating cycle of this particular company, and then maybe you can use the judgment. Right? You can make some adjustment here and then and arrive at that optimum level of working capital, right? So, but the first step is basically listen to the customer, what he says, listen to his version, okay? So one more analogy we can draw between the child staying in the hostel and the companies. We said a 2,000 per month is a reasonable amount for the child, right? Per month he's going to require 2,000 of expenses. You don't assess this requirement every day, right? If you divide this by 30, say you're getting around 70. Okay, you don't do this assessment every day. Today you're going to request 70, tomorrow you're going to request 60. Sunday you need to go to a movie, maybe you require 80 or 100. You don't do this individual daily assessment, right? What you basically do is you arrive at a monthly figure. Per month you're going to require 2000. Okay, individually per day it might vary from day to day. That is different. Okay, but you arrive at a monthly figure and say this is the monthly expenses. Similarly, in the case of companies, you don't do daily assessment, right? You don't do this. See what is the working capital required by the company today, tomorrow. You don't do that. What banks do is they assess the working capital requirement for 1 year. This is the usual practice. Okay, for 1 full year you arrive at what is the working capital requirement to the company and then sanction the limit accordingly. See, in case of seasonal industries, they are industries which are seasonal in nature. So in some months you have the requirement will be high compared to other months, and some months will be lower. Like sugar industry, right? Sugar is a seasonal industry. Rice mills also seasonal. But so there you might ask, if in 1 month a company requires 10 lakhs, in peak season if it requires 25 lakhs, right? And again it comes down to 10 lakhs. If this is the requirement, and then then what is the limit you're going to sanction? If you sanction 25 lakhs, a combined limit for the whole year, in the initial months when they require only 10 lakhs, they might utilize the entire 25 lakhs, and that will be a diversion of funds. They might be utilizing that additional 15 lakhs for some other purpose, which is not what the banks want. So how do you do that? How do you do in those sort of situations? So what banks do in those cases is they sanction. There are ways in dealing with this. Okay, so banks might sanction a peak limit and a normal limit. That is something they can do. Or they might sanction 25 lakhs, but they restrict the drawing to only 10 lakhs in the non-peak season. They will restrict the drawing to only 10 lakhs. In peak season, they will allow the full drawing to be. So there are ways to control, right? But basically the point is you don't do a daily or a monthly assessment. You sanction a working capital limit for 1 full year. You analyze the requirement for 1 full year and sanction a limit. Monthly, if you want, you can control the drawing level. Okay, so that is one more analogy. Okay, the period. This is for a 1 full. This is the assessment is for 1 full year, right? See, in the case of this child working in the house, studying in a different city, you don't want to give him less than the requirement. Say if the true monthly expenses to 2000, you don't want to be giving him some 1000 or 1500. You don't want to be having a situation where the child struggles to meet the expenses and couldn't concentrate on the studies. You don't want that sort of situation. Yes, you don't want to over finance in the sense that you don't want to give him 4000 or 5000 and spoil him, but at the same time you also don't want to under finance him. Okay, in the case of companies also, as a banker, it is your, as an assessing officer, as credit processing officer, it is your duty to see that the unit is not over financed. If the a reasonable credit limit, a very reasonable working capital limit requirement for the company is 50 lakhs, yes, you should see that you don't sanction 75 lakhs or 1 crore. Okay, this is right, but at the same time you should not get you in a situation where you underfinance the company, right? Because if the unit is underfinanced, right, the unit will not be functioning properly. The turnover won't be to the expected level, and ultimately your repayment will also be affected. See, if the unit does well, the bank repayment will be done promptly. If the unit doesn't run properly, the bank is going to be affected. Your repayment is going to be affected. So yes, overfinance is not good, but at the same time, you should also ensure that there should not be any underfinance, right? So one more analogy is, now the child will always be trying to quote a higher requirement. Say maybe he requires 2000, but he says, no, I require 3000, and he will say a number of reasons why he requests 3000, right? He'll come up with a lot of excuses why he requests 3000, because it's always nice to have a extra cushion, right? And again, the companies will invariably project a higher requirement. See, even if say for example they require 25 lakhs working capital limit, that is sufficient for this company, but you will encounter in almost all cases where they're quoting a higher requirement, 30 lakhs, 35 lakhs, 40 lakhs, 50 lakhs. You'll always encounter situations where companies will quote a higher requirement. The company officials will try to convince the banker that we need a higher requirement, higher working capital limit. Maybe they'll say we need to stock a higher level of raw material. This raw material is there are problems in this raw material. The situation right now is we are facing difficulties in procuring the raw material. There's a shortage, so we need to stock a higher level of raw material. Or they will say we need to give higher credit to the customer, so our debtors are higher. So they will come up with various reasons, quoting, trying to justify why they require a higher working capital limit, and it's your duty as a processing officer to ensure that you don't fall into that trap, right? So in the case of this child, studying in this different city, one way which you can arrive at that correct amount of working living expenses is maybe you can talk to parents, of children who are staying in another city. Maybe one of your colleague has a son who's also studying in not maybe not in the same city in the same college, but maybe in a different city. So you get a rough idea as what is the monthly expense. This is a very good method of arriving at an approximate level of monthly expenses. In the same way, in the case of companies also, an excellent way to arrive at this reasonable working capital requirement is if you can get hand on the data on the working capital figures of companies in the same industry, right? If your borrower is a steel plant, if your borrower is a steel trader, right? He's a steel trader. He's asking 25 lakhs, right? His turnover say is 2 crores. If you can find within your bank in your own advance portfolio or some other bank or in some other zone, somehow if you can get data of similar traders who are engaged in the same activities, these are also steel traders, right? Of roughly the same turnover, maybe 1.5 to 2 crores or 3 crores, around this, right? Similar turnover. And then if you see the working capital limit which they are managing, maybe 15 lakhs is the limit with which they are doing business. Maybe that is sufficient. Then you will be in a position to compare, right? Then you will be in a position to compare these two units. Maybe then you can talk to this particular customer and inquire why you require 25 lakhs when other companies are managing with 15 lakhs. So this is a very good practice. As a credit officer, you should always try to do this. The problem maybe steel trading, of course, is a very common activity, but maybe for this particular different activity, maybe you could not find a similar borrower. In which case it will be difficult. But then again, if it is not available in your bank, in your particular branch, you can see whether it is available. Similar borrowers are existing in some other branch of your bank, right? In some other zone, neighboring zone, right? Or you can always talk to your regional office or circle office or even head office. Definitely you will find a similar portfolio, and then you can get it and then you will get a fair idea as what is the average requirement in this particular sector, right? Now one more thing you can do is if you can, in the case of this the child child living in another city, you can compare his last 3 to 4 months average monthly expenditure, right? Say for example in the last 3 to 4 months we are sending him 2,000 per month, but this month he is asking 3,000. Then definitely you can ask him why this month you're particularly asking higher. Is there any particular reason why you're asking a higher amount this particular month, right? In the case of companies also, if it is an existing borrower, this is a company which is dealing with your bank for the past say 5 years or 10 years, you'll have past data. Now the company is coming for enhancement of working capital, and then you are then you are analyzing the projected financials, and then you see that the company has arrived at the working capital requirement on some assumptions, on some holding levels. Say the company has say the debtors level, it's projecting at 2 months, right? But whereas from the past data for the past 3-4 years, the average debtors is only 1 month. So then you can ask the company, right? As per your past data, your debtors level is around 1 month. Why now you are projecting level of 2 months? Or raw material stock, the company is basically as per the past data, it's maintaining a stock of around 1 month sufficient, 1 month consumption. But this one is particularly projecting for the next coming 2 years, it's going to is projecting a higher stock 3 months. So then immediately you can inquire with the company why this discrepancy. So it's not that you are going to decline outright, but you're going to inquire why you're projecting a higher limit. Okay, so this is one thing you can do. You can always compare the past actual figures, especially for the past 2 to 3 years. Okay, and see whether there's any discrepancy. So now we have seen the basics of working capital requirement. Right? We have seen we taken an example and we have compared we taken an analogy and tried to see the basics of working capital assessment. So one more thing you need to understand when dealing with working capital assessment is you should always focus on holding levels, right? You should never talk about absolute value, right? Never in an assessment talk about absolute amounts, right? Because absolute amounts are very difficult to compare. Here we can take an example of a small family, right? If the father of a family asks his wife, now how much rice is there in the house? Okay, he wants to know how much rice is there in the house, so that he wants to, because he's going out. If it is less, he wants to purchase a new rice bag. Okay, so he just asks his wife how much rice is there in the house. Now the wife might answer in a different way, a number of ways. Now she might say there is rice of value 500. Right? There is some rice. Right? There is some rice. The value of this rice is 500. Or she might say we have rice of quantity 10 kgs. Or she might say there is rice sufficient to feed us for the next 10 days. Now, so which of these three answers will be more useful to the husband? You know. So if you think about it, this the first answer is really of not much use. You see, the purpose here is not to sell this rice in the market. This is for the consumption. The value of the rice is 500. Okay, but what is he going to do with it? Say for example, he doesn't know the conversion. He doesn't know the conversion. He doesn't know how much this 500 means in terms of quantity. He doesn't know. So what is he going to do? It might be a case where 1 kg of rice is 500. This is a highly hypothetical situation, but in such a case, if really this 500 is equivalent to 1 kg, it is going to last only for 1 day. He needs to purchase it today, right? On the other hand, if this is equivalent to 10 kgs, then he can wait for 10 days. So this amount is not going to give him any particularly useful information. 10 kgs is better. If the wife says we have rice 10 kgs, it is better. Again, that is assuming that he has an idea that they're going to consume 1 kg per day. Again, assuming he has that sort of fun information, this is going to be useful. But the third answer is most useful. See, if she says there is sufficient rice for the next 10 days. If she says that, here she is not mentioning about the quantity, that there is 10 kgs of rice. She's not speaking of the amount. The value of this rice is 500. She's not talking anything. She's just saying the rice is sufficient for the next 10 days. So the husband will get an idea that okay, for the next 10 days there's no urgency. So now though he's going in the market, maybe there's no urgency, right? Maybe he can purchase it after 5 days. There is no immediate urgency. So please understand that in the case of companies also, you never talk in terms of absolute values. Because when there's a production department, okay, there's a production department in the company, right? So there is some production daily. There is going some production. So the stores department has some raw material stock. There is some tons, 10 tons of raw material is there. Now the production should go uninterrupted. So there should always be some sufficient stock in the raw material in the godown. Okay. So if the production manager asks the store in charge how much raw material we have, because this production manager has to ensure that production does not stop. It has to go as per schedule every day. So maybe daily he is going to consume 1 ton of raw material. So he asks his store in charge. So how much raw material is there in the godown? Now if this person says we have 50 lakhs worth of raw material, it's not going to be much use to the production person. So because if it doesn't matter to him whether it's 50 lakhs or 10 lakhs or 10 lakhs or 1 crore, because his intention is not to sell this and realize some profit. That is not his intention. This amount is not going to make any sense to this person. But if this person says there is sufficient inventory for the next 10 days, then this production manager, okay, will be having an idea, right? This is good. So we are comfortable. But if he says there is raw material only for 2 days, then he will be alerted. Then there is an urgency to immediately replenish the stock. Then maybe he'll talk to his purchases department and ensure that he gets a next shipment. So are you getting the idea, right? The idea here is never talk in terms of absolute amount, because it's not going to be much useful in real business world. Always talk in terms of holding level. It's not just the case of raw material. Even finished goods or debtors or creditors, we're always going to talk about it in terms of holding levels, right? This is very important for you as a processing officer, as a credit processing officer. If 2 companies come to you, these 2 companies are in the same industry. Let us assume they are in the same industry, but they're entirely different in terms of size. See, one company is having a turnover of 1 crore, whereas other company is having a turnover of 100 crores. They both come to you for sanction of CC limit. Okay. So obviously the amount of raw material stock they need to maintain the godown varies from company to company, right? So for this small company, maybe 15 lakhs stock of raw material sufficient, right? For this big company, they require 15 crores of raw material stock for smooth operations. Okay. Now, as a processing officer, if you were to decide what is the reasonable level of raw material stock, because ultimately you are sanctioning the CC limit. For sanctioning the CC limit, you should know what is the ideal level of current assets to be maintained by a company. And current assets is broken down into this inventory, raw material, work in progress, finished goods, data. So you individually price each and every item. So let's take the raw material. So raw material, what is the reasonable amount for this industry? Is it 10 lakhs or 80 lakhs or 5 crores? You cannot say again, because you cannot speak in terms of absolute values. For a small company, 15 lakhs is sufficient. A large company, 15 crores is required. So if somebody asks you what is, say this is the cement industry. So somebody asks you what is the reasonable amount of raw material stock to be maintained in this industry, in the cement industry. You cannot give an answer in absolute terms, right? It varies from company to company based on the size. So, but you can say one thing. Maybe you can say for all units in the cement industry, 3 months raw material stock. That is sufficient to cover the consumption for the next 3 months. That is a reasonable holding level. That you can say in case of both companies, irrespective of the size, because they are not speaking about amount. You can say for the cement industry in this particular area, in this locality, maybe this the raw material for this particular region is coming from some other state. It is located so and so kilometers. There are some transport issues here. So basically you get an idea that okay, 3 months raw material, that is 3 months raw material is a reasonable stock to be maintained for cement units operating in this industry. Now once you have that idea, then you can convert this into amount for individual companies. For the small company, then 3 months might be equivalent to 15 lakhs. For a small company, this 3 months will be equivalent to 15 crores for a large company. So once you speak in terms of holding levels, comparison will be very easy. Okay, but if you don't do that, if you talk only in terms of absolute values, then you need to have a table like this. Say industry A, steel industry; industry B, right, fertilizers industry; industry C, cement industry. And then for industry A, within this steel industry, you have to say if the turnover is 10 lakhs, a reasonable raw material is 2 lakhs. If the turnover is 15 lakhs, reasonable raw material is 3 lakhs. And then for various turnovers, you have to build this table. Then you go to the second industry. Again, for each turnover, this is a very cumbersome process. Right? If you don't speak in terms of holding levels, if you speak in terms of absolute value, this is how you want to approach as a banker. You have to build this table, right? For various turnovers, what is the reasonable raw material? This is only for raw material, okay? Again, you have to do for work in progress, finished goods, debtors. So that's going to be a very cumbersome process. That's why you always speak in terms of holding levels. That is very easy. Just say for this particular industry, the reasonable raw material stock is 2 months. For this particular industry, a reasonable debtors is 3 months. If you speak in terms of holding levels, it's going to make your life much simpler. Okay, then the question arises, what is reasonable? How are you going to say this is a reasonable level? Who said this is reasonable? 2 months consumption raw material stock is reasonable for this particular industry. Who arrived at this 2 months consumption? What do you mean by reasonable? So then we can arrive at this reasonable level in a number of ways. Okay, one thing you can do is you can take the past data of this company. If this is an existing customer, you can see the last 2 to 3 years actuals. What is the average raw material stock maintained by this company, and then that will give you a fair idea as to what is the raw material requirement of this company, holding level, right? Or you can look at the industry average of all the companies in this particular industry. The problem is difficult to get the data, right? And also there are some individual factors. It varies from companies to company, right? Company to company. So that might be difficult. But then if you can get a basic subset of this industry in a particular bank, that would be a good starting point. Okay. Or you can compare with similar peers. What do we mean by peers? Peer companies in the same industry and also roughly around the same size. Okay. This will be a very useful comparison, provided you have similar companies in your advanced portfolio. You can do this comparison. Okay. So in practice what is done is basically banks follow this method. Basically they start with this. If it is an existing company, they take the last 2 to 3 years actuals and then get a fair idea, and then they will adjust this figure based on these factors, if possible, if they can get hold of these factors, and then they use the judgment to arrive at what is a reasonable level. This is what is done in practice. In practice, banks try to look at the past actuals. Say the past, we are in 2013. So they'll see 2011, 2012. What is the raw material stock this company is maintained? Maybe 2.7. Maybe here is 2.4. So they get a rough idea. Okay, 2.5 months, 2.5 months is around the average raw material stock being maintained by this company, and then they see whether there are any similar companies in their advanced portfolio. Maybe similar companies are some are using 2.1, some are using 2.9, some are 3.1, some are 2.4. So they see this and okay, they'll say it's around 2 to 3 months. There are some extreme values. Okay, so okay, it looks like 2 to 3 is a fair idea in this fair raw material holding in this industry. This company is maintaining around 2.5. So in the projections, when the company is applying for enhancement of limits, in the projections, if they project anything around the 2.5 to 3, that's all right, they will take it. Okay, this is reasonable. But if they start projecting 4, 4.55, then then the bankers will be questioning. So this is how it is done in practice. Okay, it's a club, it's a mixture of these three, right? They'll start with this and then they combine that with these two, right? They use their own judgment to arrive what is a reasonable holding level. So for example, let us take this example of Cipla. Okay, Cipla is a major pharma company, right? So in the financial year 2011-12, Cipla has consumed raw material. For Cipla, raw materials are drugs. Okay, basically drugs and some solvents and capsules. Okay, so Cipla has consumed 2300 crores of raw material in this particular year. This is the consumption for the whole year 2011-12. Then as on the particular day of 31st March 2012, the raw material stock, the closing stock of raw material for Cipla was 830 crores. So if we were to know what is the holding level, what is the stock, right? Holding level, please remember, holding level is in terms of days or months, right? Days or months. So this is what we are going to do in every case. We are going to take the figure. So this is the figure, the closing stock in the balance sheet. Cipla's raw material closing stock, the inventory, is an absolute value. This is an absolute value because it is in rupees. We are going to convert this into months or days, whatever. That what we are doing, this is a holding level, right? So we are not going to talk in absolute value. We are going to convert that amount into holding level in terms of months. So let us see how we are going to do that. So Cipla, if you see for the whole year, this figure is in the P&L account, right? In the P&L account you have sales and the expenses, you have raw material, power. Remember, right? We did this, right? So this raw material comes from P&L account. This closing stock comes from balance sheet. Under liabilities, assets, here assets, current assets, you have inventory, debtors. Okay, so this comes here. So one figure is from the P&L account, right? This is from the P&L account, this is from the balance sheet. So how are you going to convert this closing stock in absolute terms into months? So it's a very simple calculation. There's no rocket science involved here. Pretty simple. So for the whole year, Cipla has consumed 2,300 crores of raw material. So on an average per month, how much they consume? So this is for the whole 12 months. So on an average per month, how much they consume? That is 2300.85 by divided by 12, right? So if you work it, you're going to get 191.73 per month. On an average, Cipla consumed. Again, this is on an average, right? We're not saying in January they consumed 191.73 crores. February they consumed 191.73 crores, right? Up to December, every year they no, this is not what we're saying. So in 1 month they have consumed 190, another 210, maybe 170, 220. On an average, for the whole 12 months, on an average, Cipla has consumed 191.73, right? This we are speaking on an average. It might vary individually from month to month. In some months it might be more than this figure. In some months it might be less than this figure. But on an average, Cipla has consumed per month 191.73 crores of raw material. Okay. Let us assume that the raw material supplier, right? The raw material supplier for Cipla has stopped supplying raw material. From 1st April 2012, the raw material supplier has stopped supplying raw material. Now, can Cipla continue production? Even if the supplier has stopped raw material supply, can Cipla still continue production? Yes, it can. Why? Because in the raw material go down, there is stock worth 830 crores. There is some raw material. This is unused raw material. This is unused raw material, right? They have purchased this already in advance and kept it as a buffer in the go down. So if the raw material supplier doesn't supply from 1st April, still Cipla can continue production with this raw material. But it cannot continue indefinitely, right? For eternity it can't do. For how many days it can do? So per month it is consuming 191.73. Now it has gone down 830.72 crores of raw material. So how many months it can continue? So this stock is going to be exhausted. So in the first month, that is April, it's going to consume 191.73. Let us assume, right? So then in May, another 191.73 on an average, right? Then June, we are expecting another 191.73, right? July, another 191.73, right? So if you add this, you're going to get around 765, right? This is what you're going to get. You cannot go into August, because if you go into full August and add up 195, it's going to cross this 830. So somewhere between 4 to 5 months, uh, you can continue without getting a supply from the raw material. So if you actually do the math, if you divide this or 830.72 by 191.73, what you're going to get is around 4.33. So what we're saying is, if the raw material supply stop today, Cipla can still continue production up to 4.33 months because it's got sufficient this much 830 crores of raw material stock. So this is the raw material holding. This is the raw material holding of Cipla. So we have converted that absolute amount 830 crores. This is equivalent to 4.33 months. If you want to speak in rupee terms, this is the value. If you want to speak in months, this is the amount. Both are same. We are saying this. We are saying that this amount is equivalent, right? This is equivalent to 4.33 months consumption. So per month supply is going to consume 191.73. 4.33 months is going to consume what, 830.72 crores. So this is equivalent to 4.33 months of consumption. This is how bankers convert the absolute amount into holding levels in months. Okay. Once bankers do that, once they convert the balance sheet figures into months, then they can make an assessment. So okay, 4 months, is it reasonable? Okay, it is reasonable. For the past 2 years, Cipla is maintaining around 4 months. The pharma industry in general also maintains 4 months. So this is acceptable. So that then they can say. But if you give this if you give this absolute value and say, is it reasonable? Is 830 crores reasonable for pharma industry? You cannot comment unless you know the size of the company. You cannot comment. So, but this you can comment. 4.33 months for a pharma industry. Okay, it is reasonable. Straight away you can say, right? So for that comfort, bankers do this conversion, right? They convert the absolute figure into holding levels in months. Okay, so then now if Cipla comes for working capital enhancement, right? So this is 2012 figure, 4.33 months. Assume 2011 10 also around 4.25, around same. Now if they come for enhancement, now if Cipla projects 4.5, okay, bankers will accept this is reasonable. But if Cipla projects 5, 6, then bankers are going to question why you are projecting a higher limit. So this is what the bankers do. Okay, so they convert every absolute value in the balance sheet into holding level in months. Right? This we see in the example of raw material. Same is done for work in progress, finished goods, debtors, creditors, everything in the balance sheet. This is the basic process, right? Now one thing you have to be very careful is you have to be careful with about this average value on the balance sheet date, that is 31st March. Let us say the raw material stock is 20 lakhs. We are not saying that on every day of this year the raw material stock is 20 lakhs. In the case of Cipla, if you see, the raw material stock was, we said the raw material stock, closing stock of raw material as on 31st March 2012 was 830 crores. Right? It doesn't mean on the remaining 364 days, that is starting from 1/4/2011 to 30th March 2012. On all these 364 days, the stock is also 830 crores. That is not what we are saying, right? We are saying on 31st March, this is the figure. But then we are using this figure to calculate the holding level, isn't it? With this figure, you calculated the holding level. Based on this, you calculate 832.72 by this per month 191.73 and arrive at 4.33 months. And then you are saying 4.33 is the reasonable holding level for Cipla, for pharma units, you're saying. And then you are using this figure to judge whether the projections are reasonable. The projection, if it is 5 then or 6, you're saying it is on the higher side. But what if on 30th March, right? This is 31st March figure, right? 830 is the 31st March figure. What if in 30th March the raw material stock was 900 crores? What if 29th it was 910 crores? What if for the previous 364 days the average is actually 925 crores? We don't know, right? This is only on that particular day, but we are using this figure as a basis and arriving at the holding level. So maybe Cipla's average for the whole year, if you take the average for the whole year, is actually maintaining closing stock of 925 crores. We don't know why this happened for this particular day, why it was low. But on an average, if you take the average of all the 365 days, the closing stock may be coming to 925 lakhs. And if you convert that into holding levels 925 but divided by 191.73, you will get a figure higher than definitely 4.33. You're going to get, so you will get a 4.82 months. 4.82 months. So this is the correct figure. Earlier you got 4.33 months. This is as on a particular day, 31st March. But whereas if you taken the whole year average is 4.82 months, this is correct. But the problem is you don't have access to this data. This data is obtained by taking the closing stock for all the 365 days and then doing the average. If you do this, you'll definitely get 4.82. The problem is you don't have this data. The balance sheet is going to give you only the closing stock of one particular on this particular date, 31st March only. Right? So even though you would love to have this data, even though you want this data, because the balance sheet doesn't provide this data, what you do? You take this data and say this is the average raw material holding level, even though this is not the average. The true average is this. The true average is only obtained once you take the closing stock of all the 365 days and arrive at an average. The problem is you don't have access to the data. The balance sheet gives only data for one particular day. So because you don't have access to this information, take that we are assuming that the 31st March figure itself is the average for the entire year. We know this is not the average. Strictly speaking, this is not the average. But because of lack of data, we are assuming the closing figure of 31st March is the average raw material holding for the entire year, right? Please keep this in mind. So can't we ask the company for that data, right? So 4.33 we arrived based on 31st March figures, right? So but we said the correct average will be getting if you take the closing stock average of for the entire year, right? This is the more correct approach. So if this is the correct approach, why don't you do this? I mean, why don't you call for this information in the company? Well, this information is available with the company. Okay, balance sheet will not have this information. Balance sheet will be having only this information, but you can call for this information of the company, right? Can't you? The company will be having this data. You can say, please give me the closing stock value of all the past of the entire 365 days. Then you calculate the average and arrive accordingly. Can't you do that? The reason why we don't do that is, as a banker, you need not be very fussy about such details. See, in an ongoing unit, in a running unit which does business day in and day out, because material comes in, production people take the material, material will be going in and out. Raw material from the supplier will be coming in and out. So on an average, this will be an average value, right? You need not be so fussy about it. In a continuous unit, any day's figure will be an average value. There might be some extremes on some days, but on an average, any day's figure can be taken as an average value. That's why we are taking the balance sheet figure as the average value. Even though this is not strictly the true average, right? In a continuous process, on a running unit, for a running unit, this will be roughly the average. So we are not going to be very fussy about such details. The other reason is if you ask for the company, if you ask this detail from the company, what is the guarantee you're going to get the true value, right? So if the company wants a higher finance working capital, so they will give false information holding level, and then they say such that the average works to 5 months, and then they'll say 5 months is the reasonable value. On the balance sheet date, on the day, for some reason we had that lower inventory, but average is 5 months. So please please assess our requirement based on 5 months of turnover. So at least balance sheet is audited. This figure is at least audited. We have more faith in this figure. So if you ask the company, you'll getting some fudged figure. So you don't do that. Okay. So even though this is not the average value, for a working capital assessment purpose, bankers take this figure as the average holding level. Okay. So we'll now move into the calculation part of holding levels. But before that, please understand a small theoretical point here. Is low inventory preferred or high inventory? The reason is neither. You want a balance. Okay, you want a balance. Low inventory. If you have a low stock, if you have a low raw material stock or a low finished good stock, there are going to be problems here. Low inventory is going to be a problem. Why? If you have a low raw material, say this raw material is going to be sufficient only for the next 5 days, right? And suddenly the raw material supplier stops producing, there's some labor strike at the side of the supplier, so maybe he cannot supply, or there's a transport strike. So there are some issues here, so immediately your production will be affected. So a lower inventory is going to affect you, right? Similarly, in the case of finished goods, if you have a finished good holding of 5 days sales, you can meet sales for 5 days, suddenly your production stops, right? You can meet the demand of the customers for only 5 days. Okay, you're going to lose customers from the 60 onwards, right? So low inventory is not good, right? Similarly, high inventory is also not good, right? What are you going to do with 6 months raw material stock, 6 months finished goods? What are you going to do with high stock? Basically, this leads to higher inventory, leads to unnecessarily funds being blocked in stock, right? Besides the risk of obsolescence, okay, right? There might be some degradation in the quality of this raw material, right? The finished goods might become obsolete. They might be out of fashion. We don't know, right? So higher raw material is also higher, inventory is also not desirable. At the same time, lower inventory is also not desirable. You need to strike a balance. Similarly, in the case of receivables, you can't give very low credit period when the entire market, when the entire competitors, when your entire competitors are offering 2 months credit to the market, to the customers. You cannot say I will offer only 1 month. Nobody will come to you. Okay, assuming all of the things are constant, assuming the price and quality, everything is same. You can't be doing this. Okay, you'll be losing customers. At the same time, you don't want to be giving a very high very high credit. Right? When everybody is giving 2 months, you cannot say I will give 6 months. Definitely people will come to you, but then your funds will be blocked for a higher period, right? So and then you need to arrange finance for this period till these funds come. You have to make some alternative arrangement. Maybe you have to go for bank finance. So and also there will be some collection issues. So again you need to strike a balance, right? So when we speak of holding levels, please understand that neither low nor high, right? Both are not desirable. You need to strike a balance. Okay. So again, before going on to the actual calculation part, right, we'll now do the calculation. Okay. So but before doing the calculation, please be very clear why we are doing this entire holding months. Okay. What we're going to do say is we're going to agree on some reasonable holding level. Raw material 3 months, right? Or finished goods 2 months. Data some level we are going to say this is a reasonable level, and we already discussed why we are going to do this. Okay. Because we cannot speak in terms of absolute values, right? 250 lakhs raw material is a reasonable stock for all units in the cement industry. You cannot make this sort of a blanket statement, because for a small unit this might be sufficient. For a large unit, maybe 25 crores of raw material is required. So we cannot speak in absolute terms. The reason why we are doing this entire exercise of holding levels is precisely this reason. It varies from unit to unit, but you can say for all cement units 2 months consumption is sufficient. Raw material stock equivalent to 2 months consumption is reasonable. That you can do. So what we are going to do is we are going to use a judgment, and first of all arrive so many raw material holding, so many months of raw material holding is reasonable, so many months of work in progress, so many months of finished goods, debtors, creditors will arrive at some reasonable figure. This is the first step. We are going to first of all assume so many months is reasonable for each item: raw material, work in progress, finished goods, debtors and creditors. Then we are going to convert this into rupee terms. That's the second step. Ultimately you have to arrive at the working capital limit, right? Ultimately you have to arrive at the working capital. You are going to sanction CC limit, say 100 lakhs or 200 lakhs. Ultimately this is in rupees term. Ultimately you have to come back to the rupee term. But the first step is let us speak in terms of months, and then we'll convert this into rupees. Okay. So that is the path we're going to take. So recall the earlier example of Cipla, right? Where we arrive at 4.33 months as the average raw material stock. So if you remember Cipla, we said 2300 was the annual raw material consumption. Then we added per month how much. We got some figure, some 180 something, right? And then we asked what is the closing stock of raw material for Cipla, right? We had some figure around some 800 crores. Then we divided this by this, okay? And that's how we arrived at 4.33. If you remember, this is what we done. So how did we arrive this? If you look at this carefully, so what we did for the entire year, what is the raw material consumption we took? For Cipla it was 2300. This is for the entire year, right? Then we calculated per month how much they are consuming. So what we did, we divided this by 12, right? We arrived at the monthly consumption. Then what we did, this I think we got around 180, right? Around 180. Okay. Then we took the closing stock. Right? We took the closing stock value that was around 800. Okay. So then we said, okay, if the raw material supplier stopped supplying, so for how many months this 800 is going to be sufficient? We said per month it's going to consume 180. So 2 months 360, right? The third month 540. So in 4.33 months, how did I arrive at the 4.33? 800 by 180, isn't it? Figures are not exactly here, okay? But this is what we did, okay? So so if you want to write up a formula for this holding level in months, right? For raw material, what we did 800 by 180. What we did 800. What is this 800? So closing stock. This comes from the balance sheet, okay? Divided by what is this 180 per month, okay? So you can say raw material consumption from the P&L account for the whole year divided by 12. Isn't it? This is what basically we did. So we can write up a small formula like this, right? So closing stock divided by per month consumption. Per month consumption is total annual consumption divided by 12. So this is what we did. Okay. So we can write up this formula. So from now on we are going to use that formula. Okay. So stock level in months is So holding level is equal to is going to be stock level divided by per month consumption. This is the formula. If you want to know stock level, is going to be holding level into per month consumption. Okay, if you want to know the stock level, it's going to be holding level into per month consumption. You can play around with this, right? If you want holding level, this is the formula. If you want stock level, this is the formula. Okay, so if you want to know what is the raw material, because ultimately you are interested in the rupee terms, not in the months term. So if you arrive this as 3 months, okay, and this consumption per month maybe is 120 lakhs, then we are going to say stock level is 360 lakhs. Okay, so this is what we're going to do, right? So let us do the individual calculation. Let us go through an example. But before going through the example, please be very clear on the CMA data format, because we're going to use this. This we already discussed earlier in the P&L account and balance sheet chapters. Okay, so if you're not comfortable with those, please revisit those lectures and be comfortable. Okay, so we'll start with the financial projections. So any customer, as a banker, as a credit officer, what you're given is a proposal application of the company. The company will be giving a CMA data. So basically these are projections. Okay, for the next 2 years, we are in 2013 say. So for the next two years, 2014 and 15, they're going to give the projected P&L account and projected balance sheet. So this as a starting point, you're going to assess the working capital requirement. Let us assume the company has company's financials are as follows. This is the P&L account. Okay, so this is a format which we already discussed. Okay, gross sales. We have various expenses: raw materials, stores and space, power, labor, repairs, depreciation, closing and opening stock of work in progress finished goods, right? Everything we discussed this, right? Then we have selling and general expenses, interest. Basically, we arrive at the net profit. Okay, this is the format. These are the figures for a particular company. Let us assume that the reasonable holding levels in this particular industry are as follows. So for units in this particular industry, a reasonable raw material holding is 2 months, work in progress half month, finished goods 1 month, receivables 3 months, creditors 1.5 months, right? This is as per our judgment. We feel that for units in this particular industry, this is the reasonable holding levels. Okay, so let us calculate each item. Let us start with raw material. Okay, so raw material, we said the stock level is consumption per month into holding level per month, right? This figure we already assumed. Okay, this we assumed as 2 months. This is the assumption. So consumption per month. So consumption per month can be found from the P&L account, right? So P&L account is going to give you the consumption for the entire year, right? So P&L account will give you the consumption for the entire amount. This in the P&L account, the raw material figure of 900 lakhs, that is broken down into 100 imported and indigenous 800. Okay, this is 100 imported and 800. Let us ignore this for a moment. So the total for the full year, the raw material consumption by this company is 900 lakhs for full year, for all the 12 months. So per month, how much the company on an average, how much did it consume? 900 by 12. Okay, so now you can do the calculation, right? So stock level is consumption per month into holding level. Okay, so consumption per month is 900 by 12. The holding level we have assumed is 2 months. So 900 by 12 into 2 is 150 lakhs. So what we are saying is, for this company, the raw material average, on an average, if the company maintains 150 lakhs of raw material, right, it will be sufficient, right? It can ensure uninterrupted and smooth operations. This is what we are saying. Okay, so this is the formula. So if you recall, in the previous segments, we have discussed this table. Okay, so we said this is how banks are going to calculate the bank finance. They're going to arrive at something called working capital gap. This is a concept we already discussed. Okay, please refer back. We discussed the concept called working capital gap. This is basically the total current assets minus creditors. So this working capital gap is going to be financed both by the bankers. Is going to be shared between the bankers and the borrowers margin. Borrowers will get some margin, right? They'll bring some margin, and bankers will sanction the balance portion. So this margin is the NWC. This is stipulated by the bankers as a minimum NWC. This we usually stipulate some percentage of current assets, say 25% or 30%, some percentage of current assets. Okay, and the balance, whatever is the balance, banks are going to finance. So if this is arrived as D, the minimum NWC D, then this C minus D is going to be bank finance. This we already discussed in the previous segment. Okay, so please refer back. This is what we're going to, this is what we done. So I'll recast this table, right? I will recast this table into this format. Same format. This is the vertical format. Everything is same. Okay. The current assets, I'm now giving a breakup. I'm breaking the current assets, raw material, work in progress, finished goods. Okay, debtors, that I have broken up. Rest of things same. Rest is same. Creditors, working capital gap, minimum NWC. Okay, minimum NWC, bank finance. I just recast this from a horizontal format into vertical format. So we arrived at a 150 lakhs of raw material holding. This is a reasonable amount for this company. So let us fill 150 lakhs here. Okay. right? So what we're going to do, we're going to do this calculation for all the other items, and finally we're going to arrive at what is the bank finance. Okay, for this example we started with 150 lakhs, so we have calculated 150 lakhs being the raw material requirement for this company. The calculation we have just seen. Okay, so if we fill up the table, this is what we'll get. We have entered the first line 150 lakhs. We have arrived at 150 lakhs. Okay, so let us move to the work in progress holding, work in process holding. Okay, so now let us calculate the work in process holding. Okay, so again same formula. Stock level is consumption per month into holding level in months. So we assumed what is a reasonable what is a reasonable work in process holding for this company, for this industry. Okay, so we said 0.5 months, right? 15 days work in process is a reasonable holding level for this industry. That assumption we had made, right? Now what is this consumption per month? In the case of raw material, we can understand what is consumption. Okay, uh, uh, so per month how much raw material is being consumed in the production process, that is intuitive, that we can understand. But in the case of work in progress, what do you mean by consumption? So here we have to understand that when a company, so if you see the production process, the raw material is going to undergo some processing is going to happen. Okay, some processing, and finally we're going to get the finished goods. Okay, for this conversion to happen, for this conversion from raw material to finished goods, so there some various inputs are going to go into the production process, right? Various inputs, right? It's not that raw material is going to be converted by magic into finished goods. There's some process involved. Okay, so let us assume this is a so what are the inputs? So some labor has to work on the machines. Okay, some labor has to work, right? We need some machines. Okay, we need some power. We need power to run the machine. So right, we need some stores and space. So various expenses go into the production process to convert the raw material into the finished goods. Okay, so if you speak in money terms, if you speak in rupee terms, we can say raw material, say this is in the 10 lakhs of raw material. Okay, so if you want to speak about this value of this work in progress, if you want to speak about the value of work in progress, you see some labor has invested their time, and you're going to pay the labor some salary. Okay, so labor has invested their time and money, so they invested their time into the production, right? Say for example, five labor have worked on this. Five people have worked on this for 2 hours. Okay, and finally it is converted to finished goods. So total 10 hours. So 10 man hours was spent. Okay, so let us assume the hourly rate. So let us assume this 10 man hours, the salary is equivalent to some 1 lakh. Let us assume. So if you want to value this work in progress, it is not just 10 lakhs now. Okay, 10 lakhs is just the value of the raw material, but then there is also 1 lakh labor involved in this work in progress. You cannot see this, right, because it's converted in form. But to arrive at that converted form in the work in progress, some work has gone by the labor, and that labor you're going to pay some salaries. Okay, so equivalent 1 lakh amount of work has gone into the work in progress. Similarly, the labor has worked on some machine, right? So it's going to run on power. So maybe for that 2 hours production, a power of say 25,000 has gone into the work in progress. So if you add up all these items, so maybe this 10 lakhs, you can say it's 12 lakhs. So when we're saying 12 lakhs, what we're basically saying is, right, so the raw material plus stores and spares plus labor plus power and fuel plus all other expenses, repairs, depreciation, all put together is 12 lakhs. That's what we are saying. Okay, and if you remember this format from the CMA data, right, if you remember this is exactly the format we had in the CMA format, right, when we arrived at something called cost of production. We added plus opening stock of work in progress minus closing stock of work in progress to arrive at cost of production, and then we added plus opening stock of finished goods minus closing stock of finished goods to arrive at cost of sales. So this is exactly the format. Okay, please remember how we are going to get this 12 lakhs. To the raw material, we are going to add up all these expenses. Okay, so for work in progress, in this formula what we are going to take is this consumption per month, right? How you arrived for raw material? For raw material, we arrived this by saying what is the annual consumption divided by 12. This is what we did. For work in progress, what we're going to say is cost of production divided by 12. We discussed cost of production in earlier chapter, right? Cost of production is raw material, right, plus stores and spares, plus power and fuel, plus labor, repairs and maintenance, other manufacturing, other direct expenses, plus opening stock of work in progress minus closing stock of work in progress. This is what you are at the cost of production, right? To the cost of production, if you add closing stock of finished goods minus closing stock of finished goods, you are at cost of sales, right? So for work in progress, you are going to use this formula. Stock level of work in progress is cost of production by 12. Instead of consumption per month, we are saying cost of production per month, because this is not just raw material, right? Something more than raw material has gone into creating the work in progress. These are all the expenses. So you have to add all these expenses, or in other words, you have to take the cost of production. Either individually you can take all these items, or the cost of production is nothing but the sum of all these items. Okay, so you can take cost of production. So cost of production by 12 is the figure we are going to take. So stock level, if you want to say the formula, it is cost of production per month by 12 into holding level. So in this example, we said 0.5 months. Okay, so this is what we're going to do. Okay, so please refer to the earlier chapters where we discussed the concepts of cost of production and cost of sales. We had a detailed discussion about this. We're not going to repeat this. So we discussed a very important concept called matching concept. So we applied matching principle. Why we did all this? We explained in detail why we did these adjustments. Why we did plus opening stock of work in progress minus closing stock of work in progress. Why we did this? This is because of the matching principle. This we discussed in the earlier chapter. So please refresh your concepts. So for this company, the cost of production is 1495, right? So 1495 by 12 is the cost of production per month into 0.5. This will be the work in progress holding. Okay, so 1495 by 12 into 0.5, 62.29, right? Now we can update the table. So earlier we had 150 lakhs as the raw material. We are now building the current assets. Okay, so raw material we earlier arrived at 150 lakhs. So work in progress we now arrived at 62.2 lakhs. Finished goods, again same concept. So instead of cost of production, we are going to say take cost of sales. Cost of sales by 12 into whatever is the holding level. Okay, so let us do that. So for cost of sales is 1445. 1445 by 12. This is cost of sales per month. 1445 by 12 into holding level is 1 month. So 120.42. So again we can update the table. We have now this table. Okay, let us see debtors. So how much amount is blocked in debtors? This is a very simple concept. So let us assume the company is offering a credit period of 1 day. 1 day means, let us say today is 20th August. If the company is going to make some sales today, it's not going to take the amount on 20th August, but it's going to collect that amount on 21st August. It is giving a credit period of 1 day. It means on the next day it's going to collect the amount. So for this company, what is the amount blocked in receivables? So let us say on this day the company has made sales of 10 lakhs. So for one day it's not going to realize this 10 lakhs. Okay, so 10 lakhs is the amount blocked for this 1 day, right? So let us say the company has a policy of 2 days as a credit period. So it's not going to receive 10 lakhs. This is the sales made on the 20th. 21st also it has made some sales 10 lakhs, right? So in that case, the amount blocked in receivables will be 20 lakhs, right? So if the credit period offered is 1 week, then the amount blocked in receivables will be sales of those 7 days. Okay, the point is, if you want to know the amount blocked in receivables, nothing but the credit period. This credit period multiplied by sales, right? Per day how much sales the company is making into the credit period, right? So very simple formula. Receivables is sales per month into credit period in months. So in this company we had the turnover of 20,000. So 20 crores. So 20 crores by 12 is the sales per month. And on an average the company is offering credit period of 3 months. So this will be the amount blocked in debtors, right? Very simple calculation. Let us update the table. This is what we got, right? So we had the total current assets, raw material plus work in progress, finished goods plus debtors as 832 crores, 832 lakhs. Okay, so this is what we arrived. So let us now look at the creditors figure. So again, creditors figure, we can have a formula raw material consumption per month into credit period in months, because it's the same logic as the receivables. Instead of you as the company giving credit to your customers, you are getting the credit from your raw material suppliers. So same concept. So what is the raw material for this data? So what we said, sales per month. Now we are saying raw material consumption per month into credit period. That's the only change. Okay. So for this company, if you do the math, you're going to get 112.5 lakhs. So again, let us update the table. This is what the table is going to look like. Now we can arrive at the working capital gap. So for this company, we had the working capital gap of 720. So what is working capital gap? We already discussed. This is the current assets minus current assets less your creditors. So for this company, you got 720. So if you recall the discussion we had in the earlier chapter, in the chapter of NWC, so we said that the working capital gap is going to be financed, it's going to be shared between the bank and the borrower, the promoters, right? The margin. So how much margin? Some percentage of the current assets the bank is going to have a policy, and the balance we are going to finance as the bank finance. Okay. So let us assume for this bank, the bank has a policy that the borrower should bring in a minimum 25% of the current assets. Okay. So the total current assets is 832, right? So 25% of that is going to work at 208. So working capital gap is 720. Minimum NWC the bank requires is 208. So what is the maximum? So what is the bank finance? The difference. Okay, the difference is 512 lakhs. Let us say 500. So for this company, based on these financials, which we considered, 500 lakhs is the bank finance. We have arrived at the bank finance. Okay. So you have to be very clear how we arrive at this 500 lakhs. The two important points we considered while arriving at this 500 lakhs. 2 points we considered. One, the bank we have accepted that sales turnover of 20 crores. The 20 crores turnover which the company has projected as achievable, and only then we have done the working. Okay. Second one, we have assumed some holding levels. If you change any one of these two, either the turnover is not achievable. Let us say as a banker you feel that the company might achieve only 15 crores, not 20 crores. If your judgment is like that, right? Or if you don't agree with the assumptions of the holding levels, we had some assumptions, right? Raw material of 2 months or something. We had the assumptions. If you don't agree with those assumptions, if you have a different assumptions, if you change either of these two, it's going to change. It might be more or less, okay? It might be more or less, but the point is, this is error based on these two figures, based on these two, okay? You accepted, you had a base turnover of 20 crores, and you had some raw material, and you had some holding levels. Based on these two, you have arrived at the finance of 5 crores, bank finance of 5 crores. So what happens if we change this? Let us see what happens if you change. Let us assume this company has come with. Let us assume the company has come with the projections we just now discussed. Okay, and accordingly the finance the company is asking for 5 crores. Okay, but you as a banker, you say you feel that 20 crores is not a achievable level of sales for this company. You feel that only this company is going to achieve only 15 crores. Okay, this is your assessment. Okay, so you ask the company, you please revise your projections and prepare a fresh set of projections. So you ask the company to submit a revised P&L account, a revised balance sheet, okay, based on this 15 crores turnover, okay, and let us assume this is how the revised projections are look like, okay. So earlier the company has said we are going to achieve 20 crores, but now we are saying is only 15 crores. So this is the first set of projections the company has submitted. Now you ask to revise, the company has given the second set of projections, and you know that every figure will change obviously. So for 20 crores you require raw material of 9 crores, but for 15 crores you're going to require only 7.2. Similarly, you're going to require lesser power expenses, labor, everything is going to change, everything, and ultimately your profit is going to change. Okay, so everything is going to change. Okay, similarly the balance sheet is going to be different. Let us also assume that is the first part, right? That is the first part. This part we have asked the company to convert the 20 crores turnover into 15 crores and arrive at the reverse P&L account. This is the company done. Now this regarding these holding levels, the company has prepared the projections based on certain set of assumptions. You said you revised the assumptions also, and this is what you did. You said you revised the assumptions also. This is what the company has revised. So you as per your assessment, these are the ideal reasonable holding levels. The company said we require raw material stock of 2 months. You said 1 month is sufficient, right? Receivables 3 months. You said 2 months is sufficient. The company said we'll get credit of only 1.5 months from our customers. You said no, you'll get two months. Okay, so you had a different set of assumptions. Now let us calculate. Let us calculate the bank finance based on earlier we got 5 crores, right? So let us see how much you're going to get this. Just because you changed only two items, you changed only two things. One you changed the turnover. One you changed the turnover from 20 crores to 15 crores, decreased the turnover, and second, the holding levels you had a different set of assumptions like this. Just by changing these two, let us see how much the bank finance is going to change. Earlier you got 500 lakhs. Let us see how much you're going to get now, right? So we can do the same calculation again. Okay, raw material stock, same formula. So consumption per month. So now we are going to take the consumption for per month, right? Earlier you had 900. If you remember, earlier you had 900 for the entire year, 900 by 12. Now we are going to take the revised figure, 720 by 12. In the revised P&L account, right? In the revised P&L account, you're going to have a raw material of only 720 lakhs. Earlier you had 900. So then you took 900 by 12, right? Now you're going to take only 720 by 12. Similarly, the raw material holding level, earlier you had 2 months, but now you're going to revise to one month. Let us see how the calculation is going to change. So 720 by 12 into 1. Now you're going to get 60. Similarly, revise the calculation for all items: work in progress, finished goods, receivables, and creditors. Okay. So let us do the. So this is how the table is going to look like. So now your current assets is going to be 455. Creditors, working capital gap is 335. Again, NWC is minimum 25% of the current assets. So 25% of 455, you got some 83. And now your bank finance is coming to 250 lakhs. So earlier you had 5 crores, now you're going to get 2.5 crores, down by 50%. So as per the company's version, they said we require working capital requirement of 5 crores. Please sanction us CC limit of 5 crores. But you are saying 2.5 crores is the reasonable level. So just by changing the turnover, and the holding levels, even if you didn't change the holding levels, just by changing the turnover, you will get a different bank finance. So please keep this in mind always. As a credit officer, you have to keep this in mind always. As a bank officer, if you're in the advanced portfolio, right, if you're working in advances, the company will be coming to you with a set of projections, right? This is 2013. The company will submit its audited balance sheet, okay, and then it will submit you some projections for the next 2 years, right? And we'll say we want a working capital enhancement. Presently, we are having 1.5 crores as the CC limit. Please enhance to 3 crores. It will give some projections justifying this, why they need this enhancement. But as an officer, the first thing you have to do is you have to understand how they arrived at the 3 crores. This 3 crores was arrived based on 2 factors. One, the company has assumed a particular turnover, and 2, the company has assumed some holding levels for raw material, finished goods, debtors, and various other items. Now you as a banker have to question this, right? If you blindly accept the projections given by the company, you're going to get a working capital requirement of 3 crores. But you have to question these two. You have to first of all ask, you have to convince yourself whether this turnover is achievable. The company is projecting a turnover 20 crores, whether they can really achieve the 20 crores. Last year the company has made a turnover of only 10 crores. So in 1 year, can they double the turnover? These are the questions you have to ask. Okay. Second, or the turnover is on a declining trend. Earlier it was 15 crores, 12 crores, 10 crores. This is 2011, 2012, 2013. This is a declining trend. Now the company is projecting 20 crores. Now projecting 20 crores. Is it achievable? So these are the questions. You have to be convinced about the achievability of the projected turnover. That's the first step. Second step, the holding levels which the company has taken in arriving at this 3 crores. What are the assumptions or the assumed holding levels? Then you have to ask. This we already seen. How to see whether the holding levels are reasonable. Take the last 2 to 3 years actual figures, holding levels. Let us see and see whether the projected holding levels are in line with the actuals, or compare with some other similar units in the same industry and see whether they are reasonable. So these are the 2 things you have to do. Unless you do these 2 things, this is always going to be as per the company's version. If you don't do this, whatever the company says, you have to accept, right? Your job as a processing officer is always to question this. See, companies will always try to ask for a higher limit. When the existing limit is 1.5 and the company is applying for 3 crores, be convinced, be sure that the company definitely can manage with 2 or 2.5 crores. Definitely it can manage. The company will always ask for a higher limit. As a processing officer, what you have to do is you have to question that. Does this company really require 3 crores? How did they arrive at the figure of 3 crores based on these 2 factors? Now you question them. Is the turnover achievable? Are the assumed holding levels reasonable? Right? Then only you'll be doing a proper appraisal, right? So the starting point is always the sales projection. That is the number 1 point. Always the starting point is sales. If the sales projection is not achievable, right? If the sales projection is not achievable, definitely the company's version of the bank finance will be higher, even though the holding levels are reasonable. Just if the sales projection is higher on the higher side, the bank finance will not be a correct figure. So first of all, look at the turnover, see whether it's achievable or not, right? If it is not, you get a revised projections, right? So finally we'll arrive at the bank finance. Okay, so this bank finance which we ultimately arrived, okay, this bank finance which we ultimately arrived here is given a special name in banking. This is known as the maximum permissible bank finance, MPBF, right? This is given a special name known as maximum permissible bank finance. This is the maximum working capital finance that the bank is going to give, right? So you have to be aware of the practical realities here. What companies will do is always try to ask for a higher limit. Okay, So if you look at the owner of a company, see, the owner of a company doesn't know about this MPBF and all this stuff. Okay, he has an idea as to how much the working capital he requires. He will say to his accounts team, his finance team, he says, I need working capital of 5 crores. You apply. That's all he says. He's not concerned about MPBF holding us and all this. Okay, because basically the owners are entrepreneurs. They're not into finance. Okay, they don't know all this stuff. They want money. They want 5 crores, right? So there could be various reasons why they are asking for this 5 crores. Maybe the company requires 3 crores only, but then they're asking 5 crores. Maybe this particular entrepreneur had an past experience that bank is going to there's going to be a lot of delay in sanctioning. So maybe he's applying a higher limit, or maybe definitely he wants to divert this money into some other purpose. You don't know what is the reason. He's asking some amount. So basically he's going to go and tell to the his accounts team, finance team, prepare the application, prepare the CMA data, so that we'll get eligibility of 500 lakhs. Right? That is the only thing he is not concerned about MPBF and holding levels. So what these accounts and finance team of this company then do is they will try to prepare CMA data. They'll try to project the sales level and the holding levels in such a fashion that they're going to get the 500 lakhs. Right? This is what's going to happen in actual practice. They will twist the figures. Now they'll do the adjustments here and there. Somehow they'll make the MPBF to come at 500 lakhs. Obviously in this process, the 2 points which we consider, that's the sales and the holding levels. Obviously these are going to be exaggerated. So if really the company requires only 300 lakhs, but they are applying for 500 lakhs, then definitely they have to show a higher sales figure and the higher holding levels. So they will twist the figures. So this is what going to do. So maybe 2 months raw material stock is sufficient, but then they will say we need 4 months. Because they have to arrive somehow at this 500 lakhs. They will twist these figures. They will show a higher sales level and they will show a higher requirement of holding levels. 2 months is sufficient raw material. They show 4 months. Creditors, they're actually getting 1.5 months credit from the suppliers, but they'll say we are getting only 0.5 months. Somehow they will twist the figures, this holding levels and sales, and ultimately arrive at whatever their owner has told them to apply. Somehow they're going to get them. So as a credit officer, what you have to do is you should never accept the company's version. Don't blindly take the CM data of the company and start processing the proposal. Okay, you have to question them. You have to question each and every primarily you have to question the sales projection and the holding levels. Under holding levels, raw material, work in progress, finished goods, debtors and creditors. Unless you do these two things, you are not going to do a proper appraisal, right? The sad part of today's banking is basically the projections being given by the company are accepted as it is. Rarely bankers ask for revised projections. They take as it is. I mean, this is not proper appraisal, right? So ultimately you're going to end up overfinancing the company, and overfinance is not at all a good practice, because it's going to lead in diversion of funds. Okay, it's sometimes done with the purpose to increase the advanced portfolio to meet the targets. Whatever may be the reason, this is not a good practice. Okay, but as a credit officer, what you should be doing is you have to be convinced that the projected sales level and the projected holding levels are reasonable, right? So if you see, if you have the senior bankers in your department or in your bank, these are people who have worked in the, say, 70s and the 80s. These are people who were there during the times of the Tannen company and all those stuff. These are very senior people, right? These are people now who are 50 plus. Now, if you talk to these people, they usually, many of them will be having some thumb rule. They usually have this thumb rule of, say, 20% of turnover. This is not a very strict rule, but they say the first thing they see is they see the turnover. If you go and ask them, sir, what is the turnover? What is the reasonable working capital limit for this company? They'll first ask you what is the turnover. So you say the turnover of this company is 20 crores. Then they'll say 4 crores is reasonable. This is the benchmark they use. So if the applied limit is 4 crores or less, the assessment will be cursory. Okay. But if the applied limit is more than 4 crores, there will be more detailed assessment. This is not a rule. But this is basically a benchmark. This is a thumb rule which many of the senior bankers use. Basically, this has the roots in Tannen company recommendations, which we are going to discuss later, right? But the point is, you can follow this. You can follow these footsteps. I'm not saying blindly follow this, but there is a value to the senior banker's judgment. Okay, so there's a good reason why they're doing this. There is a basis for this. Okay, so as a starting point, when you get a proposal, look at the turnover of the company, calculate 20% of that, and see if the applied limit is more than this or less than this. That's the starting point. Don't decline it straight away if it is more. The point is just to have a rough idea. Just to have a rough idea. Then we can scrutinize the projected turnover and the holding levels. Subsequently, we can do that. Okay, that we can do. But as a starting point, this is where you can start. Let's see the projected, see the turnover, and 20% of that is the limits reasonable or not. Okay. So with this, we come to the end of the segment. So in this segment, we have discussed the very important concept of holding levels. In the earlier segment, if you remember, we discussed about NWC, right? In this chapter, we discussed about holding levels. So these two put together are the core of working capital assessment, right? So in the next segment, what we'll do is we will continue our discussion. We'll build on the basics we have discussed so far. We'll be discussing about some assessment methods. So what we were discussed so far is something known as the second method of lending. Okay. Second method of lending. So we are going to discuss other methods of lending. They're also used in banking. Okay, this is the most widely used method, by the way, but there are other methods also which we're going to discuss in the next segment, right? So